Hello everyone, welcome to the Ichimoku charts.com hourly analysis for the Aussie dollar US dollar FX for Tuesday the 20th of August 2013. Now trading into Wednesday the 21st of August. And just looking at the trend in the current bar that has finished trading, that's the second last candle here, on the chart, and the trend is down. We have a candle that's made a lower high and a lower low, and a very bearish large black body candle. The sellers have taken very strong control of this market at the close in that hour of trading, and they have been very strongly committed. A very nice extension of the size of the body of this candle. But at the end of a trend like this, when we have a large extension in the size of the candle as such as this, it does tend to suggest that it is perhaps an exhaustive candle, and we may see some buying coming in. And that's potentially what we're seeing at the moment with this current candle, as it's developing a white body candle, and there is potential for this market to trade higher from here. Now, this very large black body candle corresponds with the market testing to the first pivot point level of support down around this 90.22, 90.23 level, and the market has probed down below there and is now being rejected up from there in this bullish type of candle. So there is potential for this market to trade back higher. Looking at the extent of the distance that the market is trading down below the Ichimoku indicators at the moment, it is trading very far down below the cloud, and that is suggesting that the market is looking a little overextended, and it wouldn't surprise to see the market retrace back up towards some of these indicators, and even perhaps back up to the middle pivot point level. That depends on if we see some continued bullishness coming into this market. Now, there is a possibility that this current candle, as it's developing, won't finalize itself as a bullish candle, and if we begin to see strong bearish activity down below this pivot point level, there is a real possibility of this market testing down to the 90-cent level, and then even perhaps to the second pivot point level of support around the 89.73 level. The 90-cent level, however, I believe should be a very strong area of support for this market. It was a previous major area, it's a round number, so a strong possibility of the market finding support down there if the market does continue trending down. But there is a possibility of perhaps the market seeing some bullishness come in, a test back up to around the Tenkan Sen or the Kijun Sen, and then to sell off again to test down to 90 cents. But we can't preempt the market. There is a possibility of that happening, but what we need to do is react to how the market is behaving, not how we think it will behave. Now, in terms of the Fibonacci extension, we're examining the relationship of the current first time frame downtrend to the previous time the market is trending down, and here we've seen the market trade through some very significant levels. We've traded now in a bearish manner down through the 423.6% level, and this suggests that there is a possibility of the market trading down to the 685.4% level down at 90.08 cents, so coinciding roughly with that 90-cent area. So let's be aware of that this move that we've seen in this market to the downside with this very strong first time frame downtrend and this solid bearishness may not have concluded, and a possibility of the market testing down to around this 90-cent level. Interestingly, it's not very often that we see markets test down to this extent, and quite often if we see a market test to around or between the 261.8% and 423.6%, we tend to see the extent of that trend exhaust. With the market testing in a very strongly bearish manner down below this 423.6% level, there is a possibility of the market testing to the 685.4, but I suggest that if we do test down to the 685.4% level, it's highly unlikely that we will test down to the next level, which is the 1109% level, and that is a major level, and it's very rare to see markets test down to those levels. Also, in terms of the Fibonacci retracement, we're getting a similar story here. We have traded in a bearish manner down through the 423.6% level, so that suggests that there is a possibility of the market testing down to a lower level, which is the 685.4% level, and that's at 89.96, coinciding roughly with that 90-cent area, so just 4 pips or so just below that area. So very, very solid support down around that 90 cents area or just above. But obviously with this strong barrier of the first pivot point support level, where the market's trading at the moment, the market may not reach down there, and we are looking very, very overextended, not only in terms of the extent of trading away from the Ichimoku indicators, especially the cloud, but certainly in terms of how far we've traded through the Fibonacci ratios. In terms of patterns in this market, we did have something of a wedge type pattern or a small pennant type pattern. Here we had a prior trend leading into the pattern. With these wedges tend to be continuation patterns, but this was an upward sloping wedge. They have a stronger probability of being a reversal, and that's exactly what we've seen here. We saw the breakout down below here. We do have a gap here or a window, and that suggests that there could be very solid resistance for this market extending from about 90.77 up to about 90.88. So very solid resistance if the market does trade through that middle pivot point level. But no patterns in the market at the moment. We're seeing very strongly dynamic trending action to the downside at the moment, but certainly a possibility for exhaustion of that trend. In terms of Ichimoku, obviously a bearish market in all 3 timeframes. The market is trading down below the cloud, below the Kijun-sen and the Tenkan-sen, and the Chiká span here is below the corresponding price action. So the momentum represented by the Chiká span is certainly to the downside, and very strongly to the downside, and supporting what we're seeing in these all 3 timeframes from the Ichimoku indicators. This is suggesting that if this market does rally from here, and it's looking as though it will, the market will find support either as a ratio of this first time frame downtrend, or around the Kijun-sen or the Tenkan-sen, or even at the middle pivot point level, and then there is good potential for the market to sell off once again. But as I've mentioned, we do need to react to these levels as the market trades to them, but at the moment solid bearish activity in this first time frame downtrend. The buyers now seem to be coming into the market as we are trading down around the first pivot point support level.